Hey everyone, this is Mark from Stocks and Cash. It is February 4th, 2018, and I'm here to give you a market update for the coming week and also go over some potential setups. So first I should just mention, my holdings. I'm done with holdings. Got out of everything on Friday. Had some ugly losses. DE, John Deere, I was down about 40%. And Seagate, I was also down about 40%. Live and learn. I mean, as you can see in the SPY, yeah, we had a pullback here, but the bottom just kind of fell out on Friday. And this candle knocked out approximately, let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days of gains. So, um, you know, lesson learned. It was tough to predict. This isn't a bearish market. It's a pullback for now until we see otherwise. But that's what happens in a pullback. The markets generally move faster, like we saw on Friday. They generally move faster in the down direction when there is some kind of pullback or correction. Volume was very high. And so now the question is, where do we go from here? There's obviously a number of support levels. There have to be a lot to happen before you could even consider this being a bearish market. This certainly is a bearish move in the short term, but for the market itself to be bearish, I would have to see the moving averages reverse, price come, start going below the 100 simple moving average, and that would be quite a ways of sideways and downward movement. It's possible that could happen, but we're not there at that point in time. So right now the futures are down. They've actually rallied up in the last few hours. They were down significantly more earlier in the night. So I mean, we don't know what's going to happen overnight, but right now the futures are still going to open down. So you see S&P down 0.24. And maybe that coincides with this fib level. I would expect that we'll at least back test this fib level, 32% retracement, 38% retracement, and maybe perhaps even, if we close below there, then our next support would be the 55, and then the 100% retracement level would be the next, price level we'd be looking for. Now, that being said, we could also hit this Fibonacci retracement of 38% and kind of blast off with a V bounce that has happened in the past. We could meander here a little bit. We could come and test this breakout level and come back again. We could be in this kind of, sideways moving, oscillating pattern. There's a lot that could happen. It's really hard to predict at this point in time until we see confirmation of a reversal or a continuation downward. So we're kind of in no man's land in the sense of predicting a direction in the market. Sentiment is bearish, as you can see, and there is certainly more room on the indicators to go more bearish. We're not even close to being oversold as of yet. MACD is bearish, RSI bearish. So there is some more downside potential. Certainly there's the potential for this all to reverse, and again that would coincide with a bounce here at the 38% retracement level. The Qs were kind of in a similar position. Had quite a sell-off on Friday as well. There's actually more room for the Qs to run down potentially to 163 or maybe 161 before potentially bouncing, or again we could maybe gap down tomorrow, touch the 50% retracement and go on, perhaps move sideways some more, but again sentiment is bearish. Indicators have more room to move down before a rebound if that's how the market decides to move. But again, to me, this is not a panic situation. It's just a matter of waiting until we get more clear direction on the market as to what positions we want to be taking. So that's kind of my analysis of the market. Here are some potential trade setups that I see, and it really depends usually how the overall market reacts. So first is Apple. Um, Based on this swing here and this little rebound, I drew my fib from the low of this candle to the high of the move, and so we've touched our 127% retracement. Maybe we bounce here. I don't know, but there is room down to 155, and then potentially down to this support level here of 149.3, or 148, 149. So Apple, I think, does still have some more room to run down potentially. It may also bounce off of this level as well. Again, you kind of have to see how the overall market plays out and how the stock price itself reacts, on Monday. So, a couple ways you could play it. It depends on how the price action works out, but Apple is starting to turn over a little bit. You can see that AEMA is trying to get below this 100 simple moving average. If that happens, that's a rather bearish indicator, but there is pretty strong support here at the extension here at 154, 155 area, and then more support at 150 if we do get to that level. Taking a look at LNG. So LNG is kind of at the 21 EMA support level. It did have a pullback, and actually I can redraw the fibs to have a better look here. So I'm going to go from our swing high here, we'll tighten it up to our swing low, and you can see that we closed right on the 38% retracement line. So if we break through there, we may come back down and test this 100% retracement, which coincides with the 55 EMA, or perhaps we bounce and try and test this next breakout level and get to 62 or 64, depending on how price action moves. I really am thinking tomorrow you're going to see some wicks. I think maybe you'll see an open, some testing of these lows here, and then maybe a close above potentially. I mean, that's a $3 move. That's probably a lot if we're not really selling off. I guess it just depends on where the market opens and what the sentiment ends up being. But you can see Stokes have some more room to go before getting into oversold territory. RSI has plenty of room, and MACD has just turned bearish. So definitely some bearish sentiment on LNG. And again, it just depends on price action tomorrow, what trade you might be interested in taking. Let's take a look at Target. So Target broke below the 21 EMA. We got a 50% target here and our 38% target, 71 and 60 or 70 or so. Well, 71.6 and 70 or so. As targets 1 and 2 before a potential bounce. You can see stochastics are now in the oversold territory. MACD is solidly bearish, and RSI has more room to go bearish as well. So target could still have some more downside, but it depends on how the overall market reacts. We may open low, or maybe even open up higher and take off. Maybe test the 8 EMA and come back down. There's still some volatility in the market, so I'd be prepared to see some some large price action swings in the trading session tomorrow. Another one is MasterCard. I still like this one being rather strong. We closed at our breakout level of 170.71. 5-minute candle. If we get a 5-minute candle and close above it, maybe we start taking off. Has a lot of upside potential based on this last swing, and with this sideways movement over the past few days, it's acted as some consolidation. You can see that a MACD is still bullish a bit, more neutral, I guess. and the RSI and the Stokes are still kind of in the overbought area. So there may still be some more meandering here before we actually take off. But it's let's say a $3 or so risk. If you put your stop at the low of this candle for a $13-14 gain. So MasterCard does look like it has a nice risk to reward if you're willing to risk $3 here at the low. Again, it just kind of depends on what the markets do tomorrow. But I am going to keep an eye on MasterCard. The next is Southwest. Southwest is interesting because it actually closed below the 100 simple moving average. It had a double top here. It broke below the neckline on, let's see, the 25th. Kind of moved sideways a little bit and continued its way down. There is the support here at the 38% retracement at $58. There's a gap here. Gaps do like to fill and typically act as support or resistance depending on the direction. So we may see some, if we do come on through this 38% line, we may come and find some support at 56. And then there's also the possibility that it comes back and corrects all the way down to 52.62. So I definitely see some more downside on Southwest. Now that being said, the Stokes are pretty oversold, although they have been oversold in the past and have continued to stay oversold. But the market or the stock rather, was moving sideways. So RSI just kind of is down at its lowest levels that it's typically been recently. If you look overall, it can get even lower, especially when it's in this downtrend. And same for the stochastics. The Stokes came down, and even in its down move, it rebounded. If we zoom in on here, oops, too much. If we zoom in here, we can see that we're still kind of oversold, kind of meandering, but overall our trend is still down. So the stochastic still definitely can stay oversold, and we can still see some downward movement. So I do think there's some more potential downside in Southwest if we break through this 38% retracement level at $58. Couple more here. Campbell's CPB. Now this one's pretty interesting. Now I'm keeping it zoomed out to the 3 year, and you can see we're at the low of 3 years. So this is a really telling chart right now. If we break this low, this value of 44.45, that could signify a lot more downside in Campbell's. It's possible that we could meander around here, and this could be a great catalyst to buy. It's max value over the last 3 years is $67, almost $68. That's about a $24 move. So there is some potential if Campbell's rebounds to buy some calls that are far out in time, some leap calls potentially. It's up to your trading plan and how you want to trade it. Certainly we'd like to see some reversal of this trend. We've actually broken below the low of the last few months. So Campbell's is looking dangerous. A lot more room to run on the Stokes, definitely a lot more room to run on the MACD, and the RSI still has more room to run down as well. So Campbell's is looking iffy, but I think there's a great opportunity, either bullish or bearish, once the trend is confirmed. So definitely keep an eye out there. And then Tesla is kind of in no man's land as well. MACD isn't really showing any indication. Stokes are kind of floating in the middle here, same as RSI. It's really hard to say, oh, let's get in, here or there. Again, if you were in the trade somewhere back here when I was first covering it, when we broke out, this is where you would have taken profit, trimmed your position size. If you stayed in, this is where you would have trimmed position size again. So whatever you're holding now shouldn't be too much. And we are still floating above this 21 EMA. So if we do bounce, there's still the potential that we could come back and test this 360 level again. But I think it also depends on the overall market. If we sell off, although Tesla didn't have too bad of a sell off. We may follow the market, or maybe we kind of get out of this, kind of consolidation and finally start breaking out. So, really, the level I would be interested in is breaking above 360. If we get a nice close above there, then I think 370, 76 is a realistic target. Thank you all for watching. Hope you have a great night. And if you have any questions or comments, please feel free to post them in the comment section. Take care.